Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at one signal that has marked the end of each of the previous three bull markets. And it's a signal that we should keep our eye on alongside our exit indicators that I've shown you in the past. I'm also going to have a look at exactly what's happening in the background of Bitcoin in terms of the ETFs and the wider markets. I'll also go through the usual 60-day cycle to know exactly where we are with Bitcoin and where we're heading in the very near term. And if I've got time at the end, I'll go through a little bit of the strategy. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So what is this magical indicator that will signal the end of this bull market? So what I'm going to do is I'm going to take it cycle by cycle. The first cycle, I'll show you exactly what happened with this indicator and how the same thing happened exactly here in the second cycle and also in the third cycle. So we know what to expect here in the current fourth cycle. So which indicator am I talking about? And the indicator I'm talking about is the 8 EMA, this blue line. And I'm going to combine it with the pi cycle, which is our main exit indicator for this cycle. So we can see that when the green line, the 150 simple moving average, crosses the red line, which is the 350 simple moving average, when they start to converge, we know that the market is coming to an end. The blue line, the 8 EMA, gives us confirmation. And in the first cycle here, this was the candle that actually closed below the blue line. So we know we're approaching the cross. We've had a red close below the blue line. That was a very powerful combination at that time. Obviously, nobody knew about it at the time, but with hindsight, we now know that. So we can use that information to guide us in the current cycle. So as soon as we got a close below the blue line, that was the start of the bear market. Moving on to the second cycle, which ended at the end of December 2017. Once again, the green line crossed the red line, and then you look for a close below the blue line here, the 8 EMA. This was the candle that gave it to us. And at this point, you get out. And in the last cycle, back in 2021, we obviously had two tops. The technical top was the April one, where the green line crossed the red line at this point. The first close below the blue line was this candle here. And that close was at 60,000. And we all know what happened afterwards. We went all the way back up to 69,000. Obviously, with hindsight, we know 69,000 was the top. So since nobody has a crystal ball knowing that we were going to go to 69,000, now with hindsight, getting out at this point and being guided by this cross of the green and the red lines, getting out here would have proved to be an incredible exit point. And without these indicators, you are left completely in the dark. So coming to the current cycle, the current state of play is that the green line is well down below the red line. And we would expect with the end of the bull market, our target is anywhere between where we are now to the end of 2024. This is where the latest information is. And as you know, we should always remain open, fluid, and flexible. So when the information changes, we have to change our narrative as well. So currently, this is the state of play. We expect the market to be ending anywhere between where we are to the end of 2024, in between which we expect the green line to cross over the red line. Wherever that's going to be, that's when we start to watch the blue line. So just judging by the previous three cycles, we can say that when the green line crosses above the red line and we have a close below the 8 EMA, this blue line, with a high degree of probability, that would be near or the top of the current bull market. Okay, so we're going to look at exactly what is driving the price for Bitcoin over here. We can see quite clearly we've broken the previous all-time high at 69,000, and this is the weekly chart. We've got a clear break on the weekly time frame, and there's only one major narrative that's driving the current Bitcoin price, and that is the ETFs. So in the last week, we're seeing purchase records being broken continuously by BlackRock, and I think just yesterday they broke this record here one more time. They purchased, I think, 15,000 in a day. And we also have an anonymous buyer in the background who seems to be buying around 100 Bitcoins every single day. And currently they're now holding $3 billion worth of Bitcoin. And so far they have amassed 54,164 Bitcoins. And that was by March the 2nd this year. And this chart is by courtesy of Huddle 15 Capital. A shout out to them. And this chart shows that it was happening for many months in 2023 as well. For most of those days, they were buying 100 Bitcoins several times in the day. And with MicroStrategy also increasing its pool of money to buy more Bitcoins with a £500 million of convertible senior notes, all we can see is that there is only one direction for the Bitcoin price. And what's happening now is that the selling that's been happening in the Grayscale Bitcoin Trust by Genesis and by people moving to lower fees has now started to subside. So BlackRock are buying several times what's going out of the Grayscale Trust. So what we can extrapolate from that is that the supply has now started to fall. And over a 7-day period, we can see quite clearly with 22,000 going out and BlackRock itself absorbing much more than that at 36,000, and with the other ETFs buying up a substantial amount as well. What we can expect is for the demand to rise substantially whilst at the same time the supply to fall, and we will be getting a supply crunch, especially after the halving when the production also falls from 900 down to 450 per day. So that's what's been fueling this rise in the price, and we can only expect this to go further up. And if we have a look at the wider markets, starting with the SPX, the march to the upside seems to continue. So we are coming closer to the 60-day cycle here, and you'll notice that we're getting more and more red candles. This candle was a first sign that we're going to get some sort of a resistance around here, but since then we've actually broken above and closed above it, which is a sign that we may have further to go. But certainly between where we are now and the end of the cycle, we should get some sort of a pullback into the 60-day cycle low before the beginning of the new cycle. And the Russell 2000, having broken through this neckline that we've been looking at for the last many months now, seems to be consolidating in this range here. It seems only a matter of time before we make a move to the upside, at least up to this level here at 2280 and further up at 2450. So these are the two levels to look out for the Russell 2000. And the dollar continues its slide, which is good for the wider markets, and that's one of the reasons why they're all looking very bullish. Despite the CPI data coming in a shade above the expected at 3.1%, it came in at 3.2%. So the trajectory for the dollar seems to be to the downside. And this is our next target here at 100 and then down to 99 here. Moving on to gold, we had this breakout from this neckline at this point here on the fourth go, as we mentioned on Monday. Now with the red candle there, we're consolidating, and this is looking very much to go much higher. And this is obviously helped by the falling dollar. And moving on to the Bitcoin 60-day cycle, there's a relentless move to the upside here. Somewhere along the line, we would expect some sort of a correction into the 60-day cycle low before we start moving back into the next 60-day cycle. And the question is, how far will it go? And in the last video, I showed you that the next target above is at $83,000 based on the measure by the Fibonacci retracement. So it could well be that in this cycle we get all the way up to the 84,000 before we have this retreat. But judging by what's happened all the way through 2023 and 24 so far, the biggest corrections we've had so far is 20%. So we can quite clearly see we're in breakout territory from the previous all-time high here. And because there's no price action up here past the 69,000, we only have one major measure of the possible and probable prices we can reach with Bitcoin here. And this is why I use the Fibonacci retracement. And as I keep repeating, that we should always keep an open mind. And as I say many times, we don't know where this is going to go. The main thing is not to get some sort of a price action to fix your mind that this is where it's definitely going to go. There are no guarantees or certainties in this market. What we have is possibilities and probabilities. And it's always good to keep the possibilities in mind as some sort of a framework, whilst at the same time keeping an open mind that we could top out at any time in between the prices that we see with the Fibonacci retracement. And I know that people want clarity and definitive figures of when to get off the bull market train, but the market doesn't allow you to do that. Just a little word about strategy here, and that is that we should make it our business not to be stubborn in holding a belief or an opinion or an analysis that goes against what the market is doing. Like for instance, the market here is quite clearly telling us that it's on its way to the upside. And yet at the same time, there are millions, if not billions, of shorts trying to short this market, expecting a fall for whatever reason they have. And unfortunately, this is where the pain in a portfolio comes from, and where the investors lose the majority of their money over time, where they hold on to a belief so strongly that they cannot accept that the market is doing something completely different. But sometimes, on the other hand, the problem comes that you don't act quickly enough, and it becomes a situation where it becomes too late, where you feel you've lost the ability to be early enough to make a change, and that's when people ride the position down to a significant eventual loss. So one of the takeaways I would like to pass on to people is that we should always be prepared to scale out when we lose certain support levels. And as I showed you with the 8 EMA and the pi cycle, once the pi cycle lines cross and we see a close below the 8 EMA, and when we get to the cross of the green line crossing the red line and the price action falling below the blue line here, the 8 EMA, it would make sense to be prepared to scale out as we become certain of losing some support levels like the 8 EMA here. Of course, we've got quite a lot of time ahead of us, but it's good to be prepared beforehand and to know exactly what we need to focus on. And I would always urge people to watch other people's videos as well and compare what I'm saying with what other people are saying, and then everybody can make up their own mind exactly what they need to do and then take responsibility for that decision. But we have our exit indicators to give us some sort of a good ballpark figure of where to get out here. And a lot of people have got caught out by this big surge in the Bitcoin price. However, there is an opportunity with the Bitcoin miners who are presenting a very good opportunity at this moment, having had a pullback of around 30%, while Bitcoin has been surging forward. And based on the previous cycles, it would appear that the Bitcoin miners are presenting an opportunity to catch up. While we know Bitcoin is very volatile, Bitcoin miners on a leverage play are even more volatile. But if that's the kind of thing you're interested in, you can join us in the private member section here to see if that's an opportunity for you. And you can join the private member section here with the Bitcoin miners by clicking any of these two buttons here, the join button or the red button here. So for the price of a coffee per week, we do 2 videos every week on a Wednesday and a Friday, and a daily market update Monday to Friday with all the news about the Bitcoin miners. So you'll find everything in the membership tab of our private member section. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.